Can you open a Hong Kong company, secure a corporate bank account, and legally claim a 0% tax rate without ever stepping foot in Hong Kong? The short answer is yes. But as a licensed Hong Kong CPA, I see international founders and digital nomads mess up the strict legal compliance every single day. Today, I'm cutting through the noise. I'm giving you the exact 3-step roadmap to build this corporate structure 100% remotely. We cover Step 1. Remote formations, the mandatory rules for incorporating from anywhere. Step 2. Corporate banking, how to secure multi-currency account without flying to the branch. Step 3. The 0% tax strategy, the exact paper trail the Inland Revenue Department of Hong Kong demands. Stick around to the end. I will also break down the real-world case study showing exactly how one of my digital nomad clients is using this setup to pay 0% tax while living abroad. Let's dive in. Point 1. Remote company formations. Hong Kong is incredibly friendly for foreign investors. You don't need to be a local resident or even visit to own a business here. The legal benefit. As a foreigner, you can be a 100% sole shareholder and sole director of the Hong Kong Limited Company, which is also one of the big differences between Hong Kong and Singapore. Because the system is digitalized, the entire incorporation process can be done via e-signatures in just 2 to 3 working days. The compliance requirements. While you can be anywhere, you must have a local registered office address and a local company secretary. It isn't an option. It's where our firm step in to keep you legal. To get started, all you need is a valid passport and recent address proof like your personal bank statements. No complicated notarizations are required for most founders. Remote corporate banking. It is divided into 2 paths, traditional banks and Fintech neobanks. Option 1. If you want to run your business fully remotely, you can open a multi-currency corporate account using neobanks from Hong Kong. There are increasing options for different business needs. These accounts provide you functional local and global accounts for receiving, paying, and of course, keep multi-currency, which integrate perfectly with the payment gateway like Stripe, PayPal. Most importantly, the whole onboarding process is 100% remote and typically takes just 4 to 5 working days once the company is incorporated. Option 2. If you specifically demand a traditional Tier 1 bank account like HSBC or Bank of China, in general, you must fly to Hong Kong for an in-person interview with the bank manager. There is no shortcut here. Furthermore, even for remote Fintech accounts, banking compliance is strict. You must provide a clear business model. You cannot simply say, I do consulting. You must present a functional website, sample service contract, and historical transaction records to prove your business is legitimate. Banks want to see a predictable, stable flow of transactions. Watch my another videos if you want to dive in for this part. Part 3. Offshore exemptions. Hong Kong use a territorial tax system. You are only taxed on the profits divided from Hong Kong. If you have no Hong Kong office, no Hong Kong employees, and no Hong Kong customers, you are basically qualified for the offshore tax exemptions, dropping your rate to 0%. The compliance requirement is, of course, this 0% rate is not automatic. You do not just tick a box on the website. Instead, every Hong Kong company must undergo an annual statutory audit performed by the licensed CPA like me. We have to connect your bank statements, invoice, and contract to prepare your audit report, then to prove your operations are truly offshore. Eventually, the Inland Revenue Department will send a multi-page investigation letter. If you don't have a reliable CPA to manage this, you risk losing your exemptions. Let's talk about the real-world case study. Take my client, a European citizen living in Thailand on DTV visa. He wants a remote marketing agency. For the setup, we incorporate his Hong Kong company in just 3 working days and secured a Fintech account to collect international money in a week, all online. After a year, he generated $2 million in revenue. Because he managed everything outside Hong Kong, we filed his audit and claimed the offshore exemptions to get a 0% tax. He paid nothing on the corporate tax or VAT in Hong Kong completely legally. You can imagine, he saved hundreds of thousands that would have gone in the European taxes. The CPA warning. So, can you really do this 100% remotely? Absolutely. As we have seen, The roadmap is clear. Digitalize your formation with e-signatures, leverage Fintech for your banking, and maintain solid offshore paper trail to protect that 0% tax status. But here is the final professional truth. Remote doesn't mean unregulated. Many founders think that because they never step foot in Hong Kong, the rules don't apply. That is the fastest way to get your bank account frozen or trigger a tax audit. To keep this 100% set up, 100% legal, you need a paper trail that stands up to the Inner Revenue Department of Hong Kong. Clean contracts, proper invoicing, and CPA need annual audit. If you are an international entrepreneur or digital nomad, don't leave your corporate structure to guesswork. One mistake in your initial setup can cost you thousands in back tax later. If you want to secure your Hong Kong structure is built lightweight from day one, click the link in the descriptions to book a strategy call with me. We will look at your specific business model and map out your remote setup together. Thanks for watching. See you in the next one.